At the end of this video, I'm going to be giving you stocks that you can trade this week. My name's Dez here at Grok Trade. This is the weekend edition, good through Sunday, August 16th, 2015. For the week, major indices basically break even. And we're looking at the S&P 500 ETFs called the Spider SPY. And as we've been talking about, we're within two different type of trend lines. Do you see the red ones here? It's a pinching action taking place going into an apex. That's like a coiling spring building up a ton of pressure. We're still below the 20-day moving average. I do have a horizontal line piercing the apex here. We did get above that on Friday. Good to see. What I'm looking for here is sizable movement. It will be a multi-day movement to one side, and you'll see big 200 point, 300 point days, big moves taking place consecutively. And that is what is expected, technically speaking, out of this small triangle. Now, if we bring in a lot more data here, you'll see the two blue lines, also a symmetrical triangle. If it breaks out of the red and the blue, you're going to see this stock market on fire. If this thing breaks through the red here and then the blue here, you're going to see this thing crash and burn. Now, I will give you a warning here. The warning is this, and heed my warning. The markets are overbought. We're too extended to the upside without any significant pullback. We just have not seen any sort of pullback in a long time. I'll show you that on a bigger time frame. But some of you guys know this already. Others do not. I have a horizontal line coming across here, capturing the highs of this price action. Horizontal line right here, capturing the lows of all this price action, going back about 1 year. So the last time price action has been below or outside of this horizontal line at 213.86, and this horizontal line, 197.71, was nearly 1 year ago. It was October 30th, 2014. So let me say it another way. For almost the last year, the markets have been trending in a sideways trading range between this level and this level for a year. So we are seeing nothing but a flattening formation. Let's go to a weekly chart here. And the weekly chart, you'll see, let me move this down so it's out of our way. Weekly chart, this goes back to, you'll see here, let's go back, way back from this weekly chart. The lows right here, 2009. And you'll see that we go higher, we pull back here, 2010, we go higher here, pull back 2011, higher, small pullback here, 2012, higher, small pullback here, again 2012, major run, a little pullback here 2013, another one 2013, up, a small little drop, not much, 2014, another little drop, 2014, up a little farther, bigger drop here 2014. So we're in 2014, we're seeing more drops. Here we get a little pullback, 2015. From that point forward, we're just going sideways. We are very extended here, very extended. If I go to a monthly chart, get this. Let me move this out of the way. Look at this. So right here, this is the crash of 2008. Huge drop. We rally up. We rally from 2008 here, 2010, a little pullback. We rally up 2011, little pullback 2011, up, and then we go right here 2013 to 2015, just a straight up run, boom, to the upside. Now we are due for a pullback, and things that go up a lot drop a lot. Things that go up quickly fall quickly. This has gone up quickly. I mean, the last time it's even challenged, it's only challenged the 20-day moving average, and the 20-month moving average rather. Back here, it did it At what day? This would be 14. This would be October 1st, 2014. Challenged it here, 2012. So 2012, 2014 is the only times it's even touched it. But this one didn't even touch it. This one still doesn't even touch it. The last time it really even touched it was back here at the middle of 2012. And you'll notice here we touch on a regular basis. We're always touching the 20-month moving average. We're always there. Look how far we are from it here. We're dying for a pullback here in the markets. So that's the big picture. If I go back to a daily chart, let's take a look at the Nasdaq. Nasdaq here, let me pull in some data so you can see this. We're still in this triangle. We're still in an uptrend. I think we have a good chance of rallying here, getting us a nice little pop to the upside as far as the techs are concerned. So I'm going to be showing you some tech stocks that you can trade here momentarily, and you don't want to miss this. I'm giving you some money. Russell small caps, falling wedge on Friday. We closed above a trend line. I mean, this bullish signal. I think we could start the week next week being very bullish here. Banks did exceptionally well on Friday. It broke. Now, this was damning to the markets here. What we did was had a rising wedge. It broke down, but we popped here. This is going to be the kiss of death. It'll rally up another day or two, hit its head, and chances are it's going to hit a trend line that's coming across here, which you can't see. Let me actually draw it for you, so we're all looking at it together. So I see trend lines in my head, so sometimes I don't draw them in. But anyway, it's going to come here, drop. It's going to come up, and it's got this area of resistance. I could definitely see it rolling into this and then dropping yet again. This is your inverted head and shoulders, gang, on the banks. Bad news for the markets. Overall, I see the markets going bullish starting off the week and eventually going nasty to the bear side. But we'll trade it how we see it. Before I get into the stocks for us to trade, make sure you go to groktrade.com. This first link up here, trading education, make sure you do the 101s. Those are free. 4.5 hours of trading education. You'll get emails that you can download and watch. Very popular. Then those will usher you into the more deeper education. 201 courses. So the 101s will drive you into the 201s. You have to do these before you can even look to us to be your mentors. We have to be able to talk the same language. If you need just to augment your income for the time being, go to the stock picks, do the stock picks V newsletter or the statistical picks. Stock picks V newsletter gives you the bull and bear list, and they are fundamentally picked, meaning that we're looking for the strength of the businesses, and then we trade them technically. Statistical picks are different. We're not looking at chart patterns. What we're looking at are statistical lows that are poised to only rally or rise from these lows. So go here, check them both out, find out which one that you fancy the most. And then the Grokstar chat room, if you are day trading by yourself, don't do that any longer. We can help you out here. Let's get into some stocks of interest. And here are some awesome stocks. Now, Apple has been crashing and burning, falling wedge. Look for a breakout at 116.62. Let me see, 116.76. Actually, I'll add an alert for myself on that one. Like what I'm seeing there, nice falling wedge, looking for a breakout over this area, 116.76. May make a trade on that. And Amazon, this one's nice. Nice rally, a little pullback here. Looks like we have a lot of upside potential here on Amazon. BABA here could be a low. It's a falling wedge, which is bullish. I kind of wish I caught it a few days ago because I only see it going higher here, but it still needs to get past this trend line for me to really be interested. But right now, if you are more savvy in your trading, you really have a trading plan and rule places or rule sets in place for you to maximize profits, but more importantly, to minimize risk. And only those who go through mentoring that should be safe to do like this sort of trading. But you could be getting in here at a low with very tight stop losses and to minimize your risk exposure. Facebook, check this out. Boom, nice bull flag that's even pinching. So this is a big pop out opportunity here. and I'm going to put in an alert for myself to buy this. So very, very cool. My alert is at 95.25. And then Google, nice bull pullback right now, looking for a trade up at, man, this dude could be ready to rock and roll right now. I'm going to do this at $61. 661 is what I'm looking for. Nice bull pullback, boom, looking for a pop to the upside. GoPro is in an uptrend. We're at a support level and an uptrend, just heading higher. As long as it can stay in this uptrend, all is well. LinkedIn is another highly speculative trade, falling wedge at a support level, looking for a bounce. This could turn into a frying pan, bullish formation up, but this could be a low base formation with a big breakdown ready to come. So you have to be very, very careful with this and very savvy on your choice of trade that you make on this, and especially how you're going to choose to exit this trade, what your exit strategy is. Again, mentoring is highly suggested before you make trades like this. Microsoft, let's go there. Microsoft has a nice symmetrical triangle, looking for a breakout to the upside or a breakdown to the downside. Either way would be a good play. PayPal also, big triangle. We got a symmetrical triangle, nice pop. I'm maybe looking to get into this early with a half a position, and then more as this thing starts to rally up higher. I like that to be at 81. So I'm doing this on the fly here, so add my second position to that. It's right into a lot of resistance, but if this is a true triangle, it should just chew right through that. And Taser could be down here at a support level, may or may not be. I'm not going to trade that one. Twitter is in a falling wedge, looking for a breakout to the upside. Whew, threw a lot at you. Hope I gave you some great trades. If you liked the video, like it. If you love it, share it. Make sure you click subscribe. Catch you guys later.